Federal Reserve Chairman Jerome Powell had an online press conference on Wednesday, June 10th, following the Fed's FOMC meeting. In the conference, Powell expressed his concerns about the condition of the U.S. economy and the high unemployment rate. Powell also restated that the Federal Reserve is committed to using its full range of tools to support the economy in this challenging time. These include keeping interest rates near zero until 2022 and purchasing sizable quantities of Treasury and agency mortgage-backed securities in order to support the smooth functioning of the U.S. markets and the flow of credit in the economy. Additionally, the Fed will continue to use its lending facilities forcefully to provide financing for households, businesses of all sizes, and for state and local governments. Chairman Powell then went on to answer some questions from the press. I'm going to go through some of the most important ones, in my opinion, and comment on them. The first one here is about the economic condition and what the recovery might look like. Powell said that as a baseline expectation, no rate increase at least through 2022. This tells us that the Fed does not see a V-shaped recovery on the horizon, and the recovery is going to be a slow process. So it's going to be 2 to 3 years before we go back to where we were before the crisis. Next, Powell was asked about the Fed's inflation forecast. Powell's answer was basically that we had close to 11 years of expansion from 2009 to 2020, and the Fed had interest rates very low during the majority of that period. Plus, the Fed was doing a lot of quantitative easing, but we did not get any inflation above 2% on a sustainable basis. So this time is going to be the same. This is really a controversial issue, and many experts do not agree with Powell on this. Many people think that there is going to be a lot of inflation as a result of what the Fed is doing right now. The Fed is printing a lot of money and injecting it into the economy, so they are devaluing the dollar every time they do that. Then we got another question. How firm is the Fed's commitment to low interest rates? Powell said, we're not even thinking about raising rates. This is supposed to be a very bullish statement for the stock market. If interest rates remain low, then asset prices could rise. However, the stock market did not see it that way and sold off aggressively the next day. The Dow dropped more than 6% on Thursday. But it's too early to judge what impact this statement from Powell will have on the stock market. We just have to wait and see. The final question was the best in my opinion. This person was asking Powell if he is worried that the Fed is inflating another stock market bubble, and if Powell is worried about capital misallocation that might result from the Fed's current monetary policy. Powell did not really address this question, he just danced around it. In my opinion, there is a bubble currently in the stock market, and there is capital misallocation. That is why we see stocks of bankrupt companies like Hertz are going higher. It's also worth mentioning that it's because of the Fed's easy monetary policy and low interest rates after the financial crisis of 2008 that many companies have borrowed a lot of money to buy back their overvalued stock instead of investing that money into their businesses to create jobs and grow earnings. We are currently witnessing a trend of the US dollar going lower and the price of gold heading higher. This could indicate that investors are worried about the Fed's current monetary policy and buying gold to hedge against weaker US dollar and higher levels of inflation in the future. That's all for this video. If you found it informative, please give us a like and comment down below. I really would like to hear from you guys. Also, please consider subscribing to our channel. We have new videos every day about investing and personal finance. Thanks for watching.